Good morning. Welcome beyond the SEAF model. I'm Jack Kosar. This is effective for the week of July 27th, 2026. Let's get started. SEAF signals for this week. We have healthcare, financials, and energy. Energy coming into the top three. We're retaining healthcare and financials. This is very much a defensively aligned SEAF model at the moment. A little bit higher on the scores here. That's, on the overall rankings. That is directly attributable to the fact that we've been seeing a lot of movement kind of back and forth in terms of will she, won't she kind of situation for the S&P 500 as we've drifted sideways since May. So, what we're seeing here kind of as an overall high level is money aggressively flowing in, aggressively flowing out on the defensive, offensive situations here in terms of, what the market is currently seeing. This money has been moving very fast. We have a healthcare chart that I'm going to kind of talk through a little bit more on a broader note in terms of just how we're seeing these asset flows move. As the SEAF model has been, kind of flipping pretty quickly, and that's directly attributable to how fast that money is moving. These bets, managers are taking these bets and putting them on, and if they're not working within even a couple of days, you're kind of starting to see it roll over. A little bit has to do with the geopolitical, as oil has gone over $100 a barrel. As the war in Iran continues to move forward, and then overall, just kind of seeing this unique alignment here with technology coming in at 2 after a tactical month of 11, and that kind of speaks to just kind of how fast some of this stuff is moving. Heading into, let's go with our sector AUM right now. As you can see here, we're playing with that 21-day moving average again. Market, like I said, S&P 500 largely sideways since May. After that run up from March and April, these little dips and divots here in the S&P 500 are going sideways. Have been how that we've been seeing that shift from offensive to defensive. So you can kind of see that, and as I would expect, negotiating that 21-day moving average. We don't have that clear breakdown that we saw from February to March like we did here, and we don't have that clear acceleration that we saw from March through May. Very much sideways, very much on either side of that 21-day moving average. We came in and tested it earlier in July, and we're kind of negotiating it right now. I think this will be a key chart here to kind of highlight and understand where we go from here. Do we continue to sit sideways and let this market kind of drift into that sideways, or do we make any of those clear moves like we've seen in the past? We don't know yet. Again, this isn't a forecasting tool. We're just tracking the assets under management, and we do believe that tracking it as holistically adding up the AUM of the 11 sector spiders does a little bit more of a cleaner job than just trading, looking at the SPY AUM, because SPY is used so much for derivatives and other kind of hedging that this seems to give a little bit of a truer signal as to what the market is doing. As long as it's above that 21-day moving average, it seems to be sideways to up. When it's below the 21-day moving average, we tend to be sideways to down. So that's kind of where we're at right there. Heading into our heat map, healthcare and financials taking a little bit of a breather on the trading week, but showing strength in that tactical month in that strategic quarter. So that momentum is there, but just not seeing the big asset flows coming in on the trading week. These are near zero here. Energy coming in real strong, 0.51 on the trading week, showing some strength in that tactical month, still being held up a little bit on that strategic quarter. That's that 9 here. As asset flows came over the last 3 months, as energy prices retreated back down to that $70-ish a barrel when one of the several ceasefires were negotiated, or the memorandum of understanding. But as that has broken down, we're starting to see energy prices come back up. Like I said, crude over $100 a barrel, and seeing that positive momentum here, 9 to 3 to 1. So that's showing some strength again, 0.51% on the week for energy. Technology uniquely coming in, 1 on the strategic quarter, 11 on the tactical month, 2 on the trading week, zero point 0.4 here for technology. This is kind of that push me, pull you, trying to figure out, are we offensive or defensive here? Right now with the top 3, we're definitely in more of that defensive alignment. But technology kind of knocking on the door there. We'll see where that happens. Utilities coming in that 8 to 4 to 3. I really like to see that shift, that positive skew as we're coming out of a negative, coming into that middle ground into that positive, and then starting to see that positive then on the trading week as well with that 3. Consumer discretionary pretty strong on the outflows, which kind of also talks to the overall defensive shift as consumer discretionary and communication services tend to be a little bit more on the offensive side of things. 0.3 outflow here and 0.43 outflow here, 0.38 for communication services. Overall, starting to see that alignment where these things are starting to trend a little bit better. I'd like to see that darker screen over all 3 time periods, but we are starting to kind of see that differential. So ideally, we start to trend a little bit and start to pick up a little bit of the alpha coming from those momentum coming into healthcare and financials. But, again, money's been flowing pretty aggressively in and out, offensive to defensive. So things have been moving pretty radically. 3 of 5 days were up days in terms of the asset flows. So money flowing into the sector spiders 3 of 5 days, but only up 0.2%. So not very significant as those inflows and outflows kind of teetered each other or contracted each other out. As you can see here, we didn't make a lot of momentum over the last week. Heading into our rainbow charts, financials showing some nice, strong relative outperformance versus the S&P 500 and really continually move higher. We are going to be testing this slight resistance level on the relative performance versus S&P 500 coming up here, but nice, strong, consistently spent in that middle to upper favorite here for financials. Financials is a very good place to be right now. Energy showing that similar move as we came out of a void neutral into that lower favored, seeing some nice movement on the relative performance versus SPY. If this continues, we can kind of get into upper middle favored. We can potentially have that similar outperformance that we had coming from January through March in energy. So, can we get a check mark too? Sure, we can go a little bit up and down sideways here, but I really like this acceleration off the bottom for the relative performance and the SEAF model traction here. Consumer discretionary, just wanted to, 11 on the trading week, pretty strong outflow, kind of pushed itself into that middle to deep avoid. And we can see here now a pretty strong underperformance downtrend in consumer discretionary with acceleration to the downside here in the recent. So consumer discretionary is definitely a place to avoid at the moment. Rolling into healthcare. Healthcare, again, I wanted to kind of touch on this briefly. A nice upward trend in that relative outperformance versus the S&P 500 going back to late April, early May. But what we are seeing here is this rapid movement in and out. Now, the nice thing is what we're seeing is strategically starting to kind of slowly move itself up here. So the lows aren't getting as low and the highs are getting slightly higher each time. But this is kind of hard, healthcare, a little bit of a pun here. It's a bit of a heart attack as the money is flowing in and then out and then back in and then back out. Like I said, though, the nice thing is we're trending upwards. But this is, as we can see here on the relative performance side, spikes up, a little bit of pullback, spikes up, sideways to pullback, and hopefully we can catch the spike up here as we're starting to flow assets into healthcare, especially if we continue this defensive alignment. But overall, trending in the right direction in that relative performance versus SPY and sitting in that upper to middle favored. I would like to see it kind of come up and sit up near the top as it did in Q4 of last year, and we got that nice little run, more of a steady run up. But overall, things are trending positively on the healthcare side. Last but not least, I did want to highlight utilities. I mentioned utilities briefly here in the showing that it's trending in that positive direction. So this is maybe not quite a lead off here, but just we're starting to see some positive things. Seem to have bottomed out in the relative performance versus SPY here toward the early part of June, and have been positively trending upwards relative performance wise since then. We're kind of eking into favor. I would like to see this kind of accelerate toward that middle part of favored, as we kind of had that a little bit of that fake out before, but things are positively trending up. As I can see here, the lows as these things pull back are getting higher each time, as well as the highs are. So things positively trending for utilities. Again, not a SEAF signal, but just starting to see some positive things, especially on the heat map, as we are starting to trend in that right direction. So just a place, utilities, a place to watch. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.